Yeah, one is Patrick from EasyFX Code Trading System, and it's Saturday, the 24th of June, 2023, and it's the weekly technical analysis for spot gold and dollar yen for the fourth week of June, and contrasting fortunes for these inversely correlated pairs. The spot gold has been drifting lower and fell through support, as the dollar yen has been breaking out and climbing higher for this year. So we'll take a look at the US dollar index later as well to see whether that has been recovering or as bullish as the dollar yen. But the technical analysis here shows that gold has been consolidating inside this descent or ascending triangle, and finally broke down on the Tuesday after Monday's holiday in the US, and Tuesday was the start of the week, and fell all the way through until Friday, finding some support. And for the dollar yen, it pulled back after a strong bullish week the previous week, and from Wednesday started to climb back up, and finally broke through on Thursday and then extended on Friday. All right, let's see what the key drivers were for last week and what to watch out for this coming week. Well, last week the main drivers was basically the Fed Chair Powell's testimony on Wednesday and Thursday, where he reiterated the hawkish stance with a projection of further 50 basis points increase by the end of the year, and as well as highlighted that there will be no rate cuts for this year. So that's put a dampener on the markets. And prior to that, on the UK economy, the CPI came out higher than expected again. And this probably influenced the Bank of England's decision to increase rate by 50 basis points instead of just 25, and now it's up to 5%. So that was a strong hawkish move by the Bank of England to tighten the monetary policy further and try to get ahead of the high inflation, and likely projecting perhaps increase all the way to 5.75%. So that's another probably 3 more rate hikes of 25 basis points each. And also no rate hikes in the near future as well. And then on the Friday, all the major economies showed lower than expected flash manufacturing and services PMIs. All of them showed weakness in both of these major sectors. Even the US continued to lag with their manufacturing weakness, and only services was slightly better than expected. So Friday was a drag for all the major economies and pulled all the currencies down, whereas the US dollar benefited from that. Looking ahead for this week, there's more CPI data coming out the Australian economy and as well as the Eurozone. But the key one this week will be the US core PCE price index, where they're still forecasting a fairly high rate, and the previous month as well was also at 0.4%, so they're still keeping the rate high, or expecting that it will be high as well. Okay, and meanwhile, there's also an event with where the central bankers, the governors, and Fed Chair Powell will be giving speeches for that event. So we'll see if there's any impact on that. There shouldn't be anything new. Right, so that's what to look out for. With E1 is the PCE price index for Friday, the final day of the month as well. All right, so let's move back to the analysis. Let's begin with spot gold. And after falling right on the Tuesday, after the US holiday on the Monday, fell below the lower trend line of this ascending triangle and continued to dip lower, but managed to recover slightly. But Thursday was the major fall. However, managed to recover somewhat on Friday, but it's getting very close to the next key support zone at the 162 fib extension, just above 1900. And with the daily 200 coming up below that as well. And Friday, it did attempt to climb back up, but after testing the previous support, now resistance, it was rejected. So that's a very ominous sign. It needs to climb back up above this resistance zone to test the 1950 again. Otherwise, it's going to continue lower before finding any kind of support. So this is at a very critical level for gold now, and there will definitely be strong support from below that. Let's see what the US drivers this week will influence the US dollar movement. And I did mention last week that you could also draw a triangle, symmetrical triangle for consolidation. And whichever way, it did fall below the lower trend line. So 1975 is quite a ways away now, and critical support, but critical resistance, but 1950 it has to get back to. Otherwise, next spot is at the 162 fib, around 1900. This is going to be a critical interim resistance zone now. Okay, let's take a look on the weekly time frame. That's where the bearish engulfing move fell below the 138 fib, closed below that as well. So it's just closed at just below 1921, sorry. And there could be further bearish momentum this week as well, just to drive it lower towards the 1900 mark, key round figure. All right. So critical level for gold needs to break above this 1935 level and climb back up to 1950. Otherwise, it could take a dip to test the 1900. Okay, and let's compare this with the US dollar index to see how that correlates with this spot gold movement. Here's the DXY, US dollar index, the inverse correlation with the euro did work out as Thursday and Friday. It did manage to climb back up and retested the 38 fib retracement area. It did, however, dip lower on Wednesday to below the trend line and the 62 fib retracement, but then managed to recover back on Thursday and Friday. Friday due to the weakness in the PMIs for the other economies and versus the relative to US economy. So US dollar took advantage on got a boost on the Friday. On the weekly time frame, that's important support there. We'll see if there's further bullish continuation this week. And support at the 78.6 is still key. There's a strong support level there. And this area, of course, is still a critical interim support at the 62 fib retracement. Interim resistance still at the 38 fib. And as well as the 103 round figure. That's a key support resistance level as well. Needs to break through that to try to climb back up towards the daily 200 EMA. But trying to get through 103 will be key. And also we can see a triangle that's forming. It's basically the US dollar is still consolidating. All right. So let's see if it's able to get back up above 103, whether it's going to be blocked there. But even though if it's able to recover above the 200, there is a very strong trend line that's in its path. So key news, there are other relatively minor news from the US as well, but the key one is the core PCE price index, where the Fed likes to take a look at this figure as the main inflation figure. All right, so I think for the fibs, we'll leave it as that. It seems to be still consolidating within this swing range. Okay, so another week to go for the month. We'll see how far the US dollar can recover from this on a weekly time frame. Yes, it's also blocked further up by the weekly 55 EMA, so that's at the 103, just above the 103 as well. So that could further impede its progress. Okay, so let's move back to the other pairs. Moving on to the dollar against Japanese yen. And Japanese yen has been weakening, and US dollar has been charging ahead, breaking through the resistance zone on Thursday and flying through further on the Friday, climbing above the 143.50 and pushing towards the 262 pip extension at 144.69, just below the 145 area. Still looking very bullish, and on the weekly time frame, yes, I'm sure it's also a very bullish candle here after this weekly time frame, after this rising two methods bullish move, bullish breakout here. So there could be a slightly more bullish momentum just to target the 262 pip. Not sure whether it's going to get to the 145, but let's see how the US dollar news is going to influence the movement for next week. Especially towards the end of the week. And all from breaking out from this descending triangle, and from hawkish Fed, from their announcement to Fed Chair Powell's testimony last week. So this 143.50 was just a guide to show above the 200 pip, just to gauge where the midpoint is to the 145, and just before getting to 262. So it didn't have any problem to get through to 143.69. So it's only just 100 pips away to reach the 262 pip extension target. So we'll see next week when it's going to hit the pip extension target, or whether it will even hit the 145. That's going to be strong resistance there. So let's push this up higher, this zone here. And support is definitely strong there. Let's move this up to the 162 pip extension, just above 140. That's a key support. And an interim support at the 142 round figure and the 200 pip extension. All right. Okay, so let's see how the US dollar reacts next week with these upcoming news. There are other minor news from the US as well early in the week, but the key ones will be towards the end of next week. All right, so do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.